I'm going to go to Hyperliquid or whoever the dominant DEX is at the time, and I'm going to trade, I don't know, Dog with Hat, Pepe Coin, Bitcoin, whatever the fuck I want to trade. I'm going to speculate on everything with high leverage because it's the only way that I can escape this drudgery that is working for a fixed salary that doesn't increase as fast as the amount of money that's being printed. And so I think that's what, it's very sad situation that the world is in, but this is where anyone who doesn't have financial assets finds themselves is, okay, the only way out is to speculate. And now I have this new way of speculating that's outside of the stock market, which, is intrinsically rigged against me.
Hey guys, welcome to Everyday Finance. According to Arthur Hayes, if Bitcoin were to reach $10 million, would not only benefit investors, but also completely alter the entire financial system. Homes, incomes, and even the national GDP are assessed in sats at that price, making Bitcoin the standard for value itself. Although fiat currencies wouldn't vanish overnight, they would gradually lose ground to a system that is guided by code and mathematical certainty. Rather than central banks or policy choices, a $10 million Bitcoin would have a $200 trillion market capitalization in Arthur Hayes' scenario, matching or perhaps exceeding the US dollar's worldwide sway. Bitcoin would still not have complete control, though, as he predicts that over the next 20 years, the world's money supply will grow to $600 trillion, of which Bitcoin will account for roughly one. This is still sufficient to significantly alter the balance of economic power. The shift would mark an irrevocable shift toward a new monetary age and would be not only financial, but also cultural and generational. This is a vision of Bitcoin serving as the foundation of a new global system, not just a price objective. According to Arthur Hayes, the true question is whether the world is ready for the changes that such a change would entail. Remember to like, subscribe, and turn on notifications for more in-depth information. And check back soon for more insights from his interview.
With the Fed, money moves basically through the large money center banks to financial players or large corporates, right, who have access to institutional corporate debt markets, or a private equity firm who has the ability to borrow to lever up an existing cash flow stream. So no new cash flow streams are created. I just have access to credit from the Fed and the banking system, and therefore I'm going to lever up an existing cash flow stream. So no one new gets hired, no new economic growth, nothing like that. So the money multiplier is very, very low. The average person doesn't receive any credit. But in this situation, I call it QE for poor people, when the regional bank is lending to a SME or an industrial firm, right? They're creating this new loan, creates a new business. They're going to build a new factory or start a new product line. They need to hire more workers. Those workers get paid. Those payments go into the banking system. And so the money multiplier is ultimately higher. Nominal GDP grows faster, and obviously inflation grows along with it. And so you get a faster expansion in the money supply. You get a faster expansion in economic growth, and you get a faster acceleration of inflation, and that's what drives assets higher. And so, but from the government perspective, their debt to GDP declines,
right,
which is what it did from 2020 to 2022 when Trump and Biden did this policy for a little bit. It depends on who you are, right? So if you are a person who's going to benefit financially, asset-wise in this scenario, this is great for you, this situation. If you are someone whose salary is not going to keep up with the inflation that's generated by running the economy hot, then this is a terrible situation for you. So I guess it's depends on who you are, what kind of assets that you have. But in general, if you take a look at China and some of the North Asian countries who've run a similar sort of policy, the real after savings earnings of the savers who put their money in the domestic banking system vastly underperform the growth in the economy. And so, that's why you have the central banks with trillions of dollars of quote unquote savings. That's the wealth of the people that they didn't allow them to spend. And so depends on where you fall on this sort of the common good versus the individual and all those sort of philosophical points of whether you think this is a good thing or a bad thing. Because it's based on a gross imbalance, right? If you look at Germany and France, essentially were political creations of the United States after World War II, who have grown extremely wealthy by being able to export their goods that were financed by America initially, not anymore, back to the American market. But American firms cannot sell their goods essentially in those markets. And so obviously this system creates a lot of gross inequality on both sides, and that's going to, it's going to change. And only it's just going to go back the other way.
Yeah.
So it's inevitable that the thing that made America great, which was okay, well, everyone blew themselves up, and America had 50% of all manufacturing capacity and everyone wanted to own dollars back in the 1950s and 60s. That can't last forever if you've built up the rest of the world, and so now things have to reverse. So it just is math. $35 trillion or whatever, $20 trillion of marketable debt, and you're not growing as fast as your interest payments, then mathematically you cannot escape that. I don't care how many stable coins you have. Like, great, de-dollarization was slowed. But, if I'm Saudi Arabia or China or Japan or Germany on a net basis, I don't really want to own a treasury. I want to own gold, or I want to invest back in my own country because I have to be accountable for my people for this change in the architecture of trade. Cool. It's great that you got a bunch of poor people around the world to have a dollar, and maybe that's a few trillion more, and they buy some T-bills. But they got to refinance it every 3 to 12 months. Like, it's not the end state that you want to be in. And especially if your debt load is growing faster than your economy, like exponential math doesn't give a fuck about anything else but exponential math.
Yeah. That is math.
Depends. But at the end of the day, we don't care as crypto holders because we know the math. We know that the debt load will go faster. And what did people do in history? Either they do some sort of debt jubilee. So the American political class could say, okay, we're just going to cancel all the debts. We're not going to pay back to foreigners. But we're not going to pay back people and asset holders as well.
Okay.
There's costs and benefits to doing that. Or we're going to inflate away the debt, right? Run QE for poor people and get the debt to GDP down. That's what they did after World War II. That's also an option. So there's different paths, but at the end of the day, you don't want to own bonds. And if you have the ability, you want to be selling dollars and owning a hard asset like Bitcoin or gold. I guess I read an article this morning, something like the market value of U.S. debt, assuming that it's there, something like $1 trillion. So, the Congress in the United States decided to revalue the gold to whatever it is, $3,800 an ounce. Then there would be $1 trillion deposited with the Treasury, and they could go do whatever the fuck they wanted to do with that money. So that's essentially a devaluation of the dollar. And obviously, you could imagine that there could be a lot of market stress because that's the United States government admitting that the dollar is not really worth this much money. And so if you own a Treasury bond, like a 10-year, 20-year Treasury, what happens to that market? Does the 10-year still trade at like 4.14% or whatever it is today, or does it trade up to like 10%? Or does it cause some market dislocation? So I think there's a lot of unknowns in terms of how the market, specifically the U.S. Treasury market, reacts to the emperor admitting they have no clothes, right? Which is what would happen if you did this massive devaluation. Yes, the Treasury gets this great one-time accounting gain of $1 trillion that they get to spend on different sorts of things, but it's the United States admitting that the dollar is not worth that much.
I see.
And so, again, who knows? Maybe nothing happens, maybe something happens. And I think that's what probably gives Besant and Co. pause. This is probably the last option that they'd like to pursue in terms of what they would do with the market. And unfortunately, the United States doesn't mine that much gold. China mines lots of gold. They would love this to happen, right? Because the Chinese people have been loading up on gold since 2008. They've encouraged by the insurance companies, by the banks, to go instead of if you don't want property, you don't want stocks in China, okay, you can buy some physical gold. And we're okay with that as a Chinese government because it's real wealth to us. And we believe that the United States at some point is going to have to admit that the dollar is a piece of trash and do some sort of massive devaluation. And that massively helps the yuan because the Chinese people have so much gold. So again, there's a lot of geopolitical market questions around doing this.
Bitcoin is meant to be long-lasting, not to be readily apparent. Bitcoin necessitates time, conviction, and slow-build knowledge, in contrast to AI's immediate impression. It is strong in part because of its early complexity. Adoption is growing gradually through families, communities, and careful investors rather than bursting all at once. Capital is subtly moving as traditional markets become oversupplied. And Bitcoin is forging its own path rather than immediately displacing the dollar. In a Bitcoin-priced world, established conventions would be disrupted. Businesses would have to provide genuine value in a system with a fixed supply if they wanted to avoid inflating their growth. When measured in sats, assets like as equities, real estate, and even wages may become less valuable. The dynamics of lending would shift. AI would develop more quickly than society could adapt. Bitcoin, however, serves as a stabilizing anchor in the midst of this turmoil, something constant amidst technological and economic upheaval. It might be the thing that keeps people going if they stick with it for the long run. Let's now examine further interview snippets.
I have no idea what the price is going to do in the short term. I mean, I think I have a $250,000 end of year price target.
Is that still your price target?
I think we could double going into the end of the year. My concern is, okay, well, from a political standpoint, a lot of this depends on Senate confirmation in the United States. And if you look at Stephen Moran, which is the most recent board governor confirmed by the Senate, it was by 1 vote. So it's very, very tight for Team Red Republicans to get their people through.
Team Red.
And so I am operating under the assumption that Team Red loses to Team Blue in November 2026, both the Senate and the House possibly.
Yeah, Mamdani is certainly giving us
which means that if Trump has anyone who needs to be approved on any of these supervisory or boards, it better happen before then. And so my thesis will be more validated if obviously Jerome Powell will be off the chairmanship in May of 2026. How do the elections go with these board governors and the district banks? Can he get Cook fired by that point? And so once he gets all these pieces in place, then I think it's going to be crazy nuts time.
Okay.
Because then, obviously Besant's on board. Then you have the Fed. Now you have control of the banking regulations, so you can deregulate the banks. You have control of the mortgage market. So there's, I don't know the amount, but there's like something single digit or tens of trillions of dollars of home equity locked in American homes. And if you lower the rates, they're going to spend the money, especially if the federal government is underwriting these loans. So the housing market could be used to juice things even further. Again, you need control of certain agencies to be able to do this. I think by mid 2026, if we're going to get this money printing bonanza, Team Trump needs to have gotten all their people in place. Yeah. Because post then, I think it'd be very tough for them to, beat the Democrats just because people don't like him. Half the country hates Trump. And so what? Right. The thing's in the other direction. Yep. Bags perform well when there's more fiat created. And we have a small asset. It's fixed supply asset, Bitcoin, and obviously there's other cryptos. Fixed supply asset, we have this gargantuan amount of fiat that has been created and will be created. The faster that goes, the more people run to Bitcoin and crypto. And so if everyone believes that, okay, Trump's got control, you listen to what Buffalo Bill Besant says on television and in the print, and he talks about how they want to revitalize America and they want mortgage rates to come down, and everybody gets a house, everybody gets a car, everybody's got a good, nice job, all these things, but no one pays any more taxes. So everybody's got this new amazing life that they didn't have to pay for because there's magic money coming out of the sky provided by the Federal Reserve and the U.S. Treasury. Then our job as investors is, okay, well, we know that if you earn a salary, you're fucked, right? You're just going to not make ends meet. So then what do we have to do? We have to find a way to get some sort of financial asset. And previously it was like gold and stocks, right? Before crypto. Now we have crypto, which has been the best performing asset class, Bitcoin, I'm talking about, in human history. When you talk about the amount of fiat that's been created since 2009. So, okay, I need to save some fiat. I need to buy some crypto. Hopefully it goes up as there's more fiat created. I know that my salary is not going to go up as fast as dollars, yen, euro, yuan are printed, and that's sort of the game at the end of the day of what we're trying to do. Once you have a stable coin and now you've got a dollar bank account, if you're not an American, now you got a dollar bank account. What do you do? Okay, well, I want to earn Fed funds, whatever it is, 3, 4, 5%, whatever it ends up being. Okay, I've done that. Okay, cool. All right, so more inflation. Got to do something else. All right, so what else can I do? Oh, there's this thing called Athena. It's an endogenous yield in crypto. It's usually about 2 to 3x, which you get in treasuries. Okay, cool. I can make it 10, 15%. All right, what's next? Oh, I want to go, buy coffee at 7-Eleven. Oh, well, take your stable coin and we'll let you spend it offline and using EtherFi and other solutions. Okay, cool. All right, well, I'm still broke as fuck. I'm making 10% on my money. That's great. I'm making better than the bank. I'm not getting depreciated like I was in Argentinian peso or something like that. I've done well, but I need still to make more money. Okay, I'm going to speculate. So now I'm going to go to Hyperliquid or whoever the dominant DEX is at the time, and I'm going to trade, I don't know, Dog with Hat, Pepe Coin, Bitcoin, whatever the fuck I want to trade. I'm going to speculate on everything with high leverage because it's the only way that I can escape this drudgery that is working for a fixed salary that doesn't increase as fast as the amount of money that's being printed. And so I think that's what, it's a very sad situation that the world is in, but this is where anyone who doesn't have financial assets finds themselves is, okay, the only way out is to speculate. And now I have this new way of speculating that's outside of the stock market, which, is intrinsically rigged against me. You might say crypto's rigged against you as well, but I say that there's more opportunity to trade whatever you want, however you want in the crypto space versus in the domestic stock markets around the world. And so now people can say, okay, I've got these stable coins. I literally just connect my wallet and now I have this whole, ecosystem in front of me where I can trade these things. I can lend these things. I can borrow against these things. I do all these different things and hopefully outpace this inflation that's being generated by the powers that be.
The adoption of Bitcoin by Wall Street is evolving into a structural change rather than a side. Large firms like JP Morgan, Goldman Sachs, BlackRock, and Fidelity are no longer merely playing around. Instead, they are developing entire crypto infrastructures, which include everything from exchange-traded products and tokenization platforms to trading desks and custodial services. Bitwise's long-term prediction that Bitcoin will reach $1.3 million in the next 10 years shows how firmly this shift is taking hold. They currently anticipate that almost all significant financial institutions will be involved in cryptocurrency within a year. Arthur Hayes' main argument that value cannot be printed but must instead be earned or preserved in a monetary system based on Bitcoin's fixed supply is echoed by this tendency that completely upends conventional finance. As assets like stocks and homes lose value when measured in sats, lending becomes more difficult. Wages might not keep up with the deflationary rise of Bitcoin. In the meantime, one of the best financial positions one may adopt is to discreetly store Bitcoin. The financial system starts to move in the direction of a Bitcoin-based framework as institutions step up their participation. Clearer regulations are encouraging businesses to enter the market. The tokenization of physical assets is increasing efficiency. However, this is a monetary reset influenced by coding, scarcity, and new norms of value rather than just an upgrade. In addition to embracing cryptocurrency, Wall Street is changing to thrive in a world that is becoming more and more reliant on sats. The next financial age will be led by those who understand this early. As we come to an end, please leave your comments below. What will happen to equities, wages, and real estate if Bitcoin reaches $10 million? Thank you for viewing, and please remember to subscribe.